This is Gene Munster from Loop Ventures reporting on Apple. As the Apple story approaches the $1 trillion mark, now just 4% away, many investors will beg the question, does the story have further upside? We believe it's still well positioned because we're entering a new paradigm that's really focused on 4 themes, and we're defining this paradigm as Apple as a service. The 4 pieces to it are: first, more stability in the iPhone business. Historically, investors have had a lot of anxiety around entering a product cycle and exiting a product cycle, but we believe that the iPhone business will be a stable grower, but albeit at a lower growth rate, 0 to 5%. Second, services. As this stable iPhone base, which is now about 800 million users, they can sell more services to. Services now is about 15% of business, but should grow at 15%-ish over the next several years. Third is capital returns. The company is in a unique position, unlike any other FANG stock, and can generate $40 to $50 billion per year that it can return to investors. At its current market cap, that should lift the shares by about 5%, but as shares continue to lift with this buyback, that will have a diminishing increase. But think of this as a lever that Apple can slowly move higher over the next several years with the buybacks. And last, number 4, is optionality value. This is around new products. We think of this as around content, augmented reality, some form of a wearable, particularly glasses, and something in automotive. What's unique here is this used to be the front point of how investors used to think about the Apple story. But in this new Apple as a Services paradigm, this is optionality in the story. Just to step back and put some perspective, every 10 years we enter a new phase in terms of how investors think about the Apple story. And we think Apple as a service will be the new paradigm that investors view the story longer term and expect that will bode positive for Apple's multiple. For Loop Ventures, this is Gene Munster.